Accounting is about paper trail. Every transaction starts with a source document, and every document needs a waiting room before it hits the ledger. Those rooms are your subsidiary books. Today, I'm giving you the CopyJS and the 30-second song hack to master this in minutes. Have a quick preview of the song.
See, cash book for all your money in and out. Oh, return outward.
What are subsidiary books? Subsidiary books are the books of original entry. The books of original entry. In other words, subsidiary books are the first books into which transactions are recorded before being transferred to ledgers. The first books into which transactions are recorded before being transferred to ledgers. CopyJS Mnemonic. CopyJS Mnemonic. The first letter C stands for cash book. So we want to look at the subsidiary books. Number one, we have cash book. Cash book are used for recording all cash and bank transactions. We use cash book to record all cash and bank transactions. O for return outwards. Return outwards. Return outward books are used for recording goods you send back to the suppliers. When you send goods back to the suppliers, those returns will be recorded in return outwards books. So return outward books can also be called the return outwards journal or return outwards day books. Then letter P stands for purchases day book. P for purchases day book or purchases journal. Purchases day book or purchases journal. This is used for recording goods bought on credit. When goods are bought on credit, they'll be recorded in the purchases day book or purchases journal. I for return inwards. I inwards. Return inwards the book or return inwards book or return inwards journal. This is used for recording goods returned by customers to you. When customers return goods to you, they'll be recorded in return inwards day book or return inwards journal. Letter J for journal proper. Journal proper or general journal. Journal proper or general journal. Journal proper are used for recording special entries. We use this for recording special entries like buying fixed assets on credit. When fixed assets are bought on credit, they'll be recorded in journal proper or general journal. So we have uses of journal. Number one use of journal is for correction of errors. For correction of errors. Journal proper can be used for correcting an errors. Number two, for recording the opening entries. For recording opening entries. For recording opening entries. Number three, to show transfer between accounts. To show transfer between accounts. We use journal proper to show transfer between accounts. Number 4, it serves as book of instructions. Journal proper serves as a book of instructions. It serves as book of instructions. It serves as book of instructions. Number 5, journal proper can be used for recording acquisition and disposal of assets on credit. For recording acquisition or disposal of assets on credit. For recording acquisition or disposal of assets on credit. Number 6, for adjusting entries. That is, journal proper can be used for recording the end of the year adjustments. We use it to record the end of the year adjustments. That is, we can use it to record the additional information. So, letter S. S for sales daybook or sales journal. Sales daybook or sales journal for recording goods sold on credit. For recording goods sold on credit. For recording credit sales. We use sales journal or sales daybook for recording credit sales. Now, we want to look at the source document. Source documents of each of the subsidiary books. So we have subsidiary books, subsidiary book. Then we have their source document, subsidiary book, and their source document. The number 1 from CopyJS is cash book. Cash book. The source document of cash book is receipts or payment voucher. Receipts, when you buy or sell on credit, you'll be issued a receipt or a payment voucher or payment voucher. Receipt or payment voucher. So we have return outwards. Number 2, return outwards. The source document of return outwards book is debit note. Debit note. That is the source document. Number 3, we have purchases daybook. Purchases daybook or purchases journal. The source document of purchases daybook is incoming invoice or invoice receipt. Incoming invoice. Incoming invoice or invoice received. Incoming invoice or invoice received. Then return invoice book. Return invoice daybook. The source document of return invoice daybook is credit note. Credit note, credit note. Number 5, we have journal proper. Journal proper. The source document of journal proper is journal voucher. Journal voucher. Journal voucher. Then the last is the sales day book. Sales day book. The source document of sales day book is outgoing invoice. Outgoing invoice. Outgoing invoice. Or invoice issued. Invoice issued. These are the source documents of the various subsidiary books.
Before I take a work example, let me give you the memory song.
C, cash book for all your money in and out. O, return outward, goods you sent back, no doubt. P, purchases day book, all your credit buying. O, I, return inward, customers returned, you know. J, journal proper, for every other entry to show. S, sales day book, what you sell on credit, let's go.
Example, identify the subsidiary books into which the following transactions are recorded. 1. Record the payment of office rent via a bank transfer of 500,000 naira. 2. Returning defective goods worth 20,000 naira previously bought on credit from supplier X. 3. Buying raw materials worth 150,000 naira from a supplier on a 30-day credit term. 4. A customer returns goods worth 50,000 naira that were previously sold to them on credit. 5. Recording the purchase of a motor vehicle on credit, 1 million naira. 6. Selling finished goods worth 200,000 naira to a customer on credit. So now let's have the solution to the question. The first item, record the payments of office rent via a bank transfer of 500,000 naira. And I've told you that the transaction that took place by cash or check, I said they'll be recorded in the cash book. So cash book take care of the cash and bank transaction. So this goes into cash book. Cash book. 2. Returning defective goods worth 20,000 naira previously bought on credit from supplier X. Now, the goods were bought from suppliers and they were later returned to the suppliers. So that means these are goods returned to suppliers. Goods returned to suppliers are called return outwards. They were returned because they were defective. No, the business is the one returning them out. They are going out from the business. So that is why it is returned outwards. So it is outwards. So we have return outwards. Daybook. DB mean daybook. 3. Buying raw materials worth 150,000 naira from a supplier on a 30-day credit term. The goods were bought on credit from suppliers. Goods bought on credit, that is purchases daybook. That goes into purchases daybook or purchase journal. Purchase daybook or purchase journal. Number 4, a customer returned goods worth 15,000 that were previously sold to them on credit. Goods were sold to customers, and the goods sold to customers were later returned by customers. Goods returned by customers are usually recorded in the return inwards. It is inwards because customers are the one taking them in. Inwards. So we call this will be recorded in return inwards daybook. Return inwards daybook or return inwards journal. Number 5. Recording the purchase of a motor vehicle on credit 1 million. This is a purchase of an asset. Motor vehicle is a non-current asset. And I've told you that the journal proper records the acquisition and disposal of an asset, that is of a non-current asset on credit. Therefore, this goes into journal proper or general journal. Journal proper will record this, or general proper. The acquisition of non-current asset is different from acquisition of inventory. Purchase of non-current asset is different from purchase of inventory. So raw materials here, but this is motor vehicles. So if you record this as purchases, that means you have committed the errors of principle. Please bear that in mind. Note 6. Selling finished goods worth 200,000 to a customer on credit. These are goods sold on credit. Goods sold on credit will be recorded in the sales day book or sales journal. Sales day book or sales journal. Sales day book or sales journal records goods sold on credit. If CopyJS helped you master the topic, drop a comment below with CopyJS and let me know which of these books you used to find the most confusing. Smash the like button, share this with your study group and subscribe so you don't miss our next video where I will be solving the full detailed worked example for each one. See you there.